Every trader, whether they realise it or not, is a Forex trader. Forex is a foundation of all products. Whether you're trading crypto, oil, gold, you name it, it's always against the US dollar. If you ignore the US dollar, you might be trading uninformed.
Welcome to Make Your Move, the podcast that values insights over immediacy. Now, this is going to be one of my favorite episodes. We're going to talk about the mother of all markets, the Forex market. And I have a veteran with me here today. Carlo, welcome. It's great to be with you.
Thank you, Peter. Looking forward to this today.
Carlo, you're the Senior Premium Client Manager at Blueberry, but you've got a lot of experience. Tell us about when you started in markets, how long you've been at Blueberry, and why you love being in the Forex space.
Thanks for the question, because you hit it nail on the head, Peter. I love trading Forex. I'm passionate about it. That's why I'm still here. So it's been roughly 4 decades. I first started pre-1990, and I started trading for a US investment bank called Bankers Trust. And there I was price making in the yen. So it was yen crosses, Aussie yen, Kiwi yen, CAD yen, sterling yen, all those crosses to our client base. There for 10 years, and that's where I learned a lot about trading, specifically Forex, and developed my love for trading. Then 10 years later, in 1999, Macquarie Bank purchased Bankers Trust. So effectively 12 years at Macquarie, doing the same thing, trading and price making Forex, also talking to central banks and global hedge funds, advising them on how to manage their reserves, as well as looking for opportunities in the market. And then the last 10 years was working for the Commonwealth Bank of Australia, looking after their global hedge funds, where I advise clients on trading and trading opportunities. And most recently, of course, here at Blueberry Markets, the last 9 months, where I bring a lot of experience and trading knowledge to high net worth individuals, family offices, and hedge funds.
Awesome. I love that. There's a lot of experience here. This is going to be an amazing episode. We're going to jump in, but first, a word from our sponsors. Quick pause before we dive into this episode, which is brought to you by Blueberry, the online trading platform built for pro traders. Whether you're diving into gold, riding momentum in indices, or fading to Dixie, precision is everything. That's why Blueberry's razor-sharp spreads and millisecond execution speeds means you're positioned when you're ready to execute. Trade CFDs in Forex, commodities, indices, and crypto, all from one intuitive platform backed by real humans. And with Blueberry's tight pricing, trading tools, and dedicated 24/7 support team, you're never alone. So when you're ready to make your move, make it with the broker that moves with you. Learn more at blueberrymarkets.com. That's blueberrymarkets.com.
This podcast contains the ideas and opinions of its author and is distributed on the understanding that Make Your Move is not rendering investment, financial, legal, accountant, or tax advice. The ideas outlined may not be suited to your financial circumstances, and therefore you should get financial advice from a competent professional. The author specifically disclaims any responsibility for any liability, loss or risk, personal or otherwise, which is incurred as a consequence of the use and application of the information outlined below.
Welcome back. Today we're talking Forex, the biggest market, the most exciting market, the market that really moves, is global in nature and has most traders watching. We've got Carlo with us here today. And Carlo, I want to start off by asking you, and I'm asking you this question given your experience, because your experience is so well-rounded, you're a veteran, you've seen a lot. Give us the foundation for Forex. Where does it come from? And what's the first thing that you look at when you want to form a view on certain Forex spreads?
So when trading Forex, it's important to use a kind of top-down approach. Think of currencies as a barometer of the health of a certain country's economy. So if we pick on, say, Australia, for example, how is the Australian economy going? If it's going well, if it's picking up momentum, if there's inflation as well too, you might see that reflected in the currency. US dollar, of course, is the reserve currency of the world. You've got the majority of central banks putting in all their reserves in USD, the largest percentage in USD. And when they change their reserves, there's big movement in and out of US dollars, and that tends to see very large price spikes in the US dollar. US dollar also is the main currency where if you're a trader of gold, silver, cryptocurrencies, oil, you name it, it's all priced in US dollars. So you need to have an idea of what is happening in the US economy and how that impacts US dollars, and then how you can trade those certain products that you're trading.
The best analogy I have for Forex markets is it's very similar to the World Cup. You've got your certain teams that dominate. They're always there. They're institutions. They lead. Your Brazils, your Argentinas, they're the majors, and then you have all the contenders. But as you say, the US dollar is king. It's the ramp in, ramp out. Why is the US dollar so dominant? And then we're going to jump in after we understand that as to why understanding Forex is so important for every other asset class.
So the US dollar is the most liquid currency in the world. It has the largest and most liquid bond market. You'll notice that most countries' central banks will place their assets in, or their reserves in US treasuries, which is the most deepest market in the world. And that's why the US dollar is key. Now, I want to talk about some of you mentioned the analogy of the World Cup. So if we try and simplify trading currencies, if you focus on just the top 8 most traded currencies in the world, the most liquid currencies, and they are in order: US dollar is number 1, the euro number 2, the yen number 3, the pound sterling number 4, the Australian dollar number 5, the Swiss franc number 6, the Canadian dollar number 7, and the Kiwi dollar number 8. And these are the 8 most popular and liquid currencies in the world. And if you trade those combinations as well, gives you many currency pairs to focus on. Now, when you're trading currencies, specifically US dollars, as mentioned previously, all other assets are priced in US dollars, and therefore there is a very strong connection. If something happens in currencies, you might see that impact commodities, equities, and so on.
I think this is really important because this leads to the second point: understanding the primacy of the US dollar, understanding the big currencies, how they trade, also impacts capital flows. It impacts how other markets move. And so for you, given your experience, how has understanding Forex helped you understand commodities or stocks or all the other markets that today can be traded on a platform like Blueberries?
Sure. So when, from a trader's perspective, what we do, like think of investment banks, their trading rooms are set up where you've got about 100, 150 people in there. You might have a corner of the room with fixed income traders, cash traders, you've got equity traders, you've got commodity traders split up into soft commodities and hard commodities, you've got energy traders, and then you've got Forex traders as well too. So the idea is to see energy build up across the whole room, and then you can actually work out what kind of currency pair you need to focus on and trade. So let's say, for example, pick on oil, for example. The current scenario is where US-Iran situation, the war is happening. You will see oil prices either spike higher or come off rapidly. And so your job as a currency trader is to look for correlations. So we know that oil, for example, is one of the largest exports for Canada. So high oil prices generally will see positive impact on the Canadian dollar. But at the same time, high oil prices are detrimental for the European economy and also Japan being one of the largest importers of oil. So if you are trading currencies, a couple of scenarios there are to sell Euro CAD and to buy the CAD versus the yen. These are kind of currency pairs that have been linked to a movement in oil prices over the last 30, 40 years. So this is what we do. We try to look for connections, correlations all the time when events happen.
It sounds like to me that the Forex markets, I'm on a roll with my analogies today, by the way, so you might like this one or you might disagree. Tell me if you disagree with it. But it's kind of like how the human body has DNA as the nucleus, as the imprint. A lot of markets, if we're looking at gold, for example, we're usually talking gold relative to US dollars, right? Mm-hmm. That US dollar basement, that US dollar reference point is really important. And then all other currencies, central banks, stock markets, everything else flows from the way that funds are moving in and out of these currencies. Is that correct?
That's true, yeah. The flow of money is so important, but how do we know what the import flow of money is right now. It's hard to sort of gauge that. Sometimes if you work for a large fund manager, you might see the flow. If you work for a large corporation, you might see the flow of funds into certain assets. If you work for a bank, you will see that kind of flow going into gold or currencies. If we pick on gold versus US, for example, there's two products there, gold and US dollars. So you might recall the tail end of last year, 2025, and the start of this year, we had gold prices just shooting higher no matter what. Good news, bad news. But that was because the main factor influencing gold was central bank demand. Now, with the US-Iranian war, it's been a flight to safe haven assets, including the US dollar. So the fact that the US dollar has gained some safe haven status from the current war in the United States versus Iran, we have seen the gold price fall and struggle to push higher.
If I walk into that trading room that you painted for us, you've got different traders trading different instruments, and I come to the Forex desk. What are the kind of 3 key skills or habits that the good Forex traders master?
Yeah, sure. So I think to be a consistent trader and successful as well over a long period of time is to master 3 key areas. And one is having a good sense of technical charting. 2 is fundamental analysis, trading the news. So there's no point in saying, well, look, I only trade charts, look at charts only. We can't ignore the fact that there's things happening globally, US-Iranian war or other events, and we talk about it all the time. It's in the media. So definitely number 1, have a good grasp, good mastery of charting. 2, fundamental analysis. And 3, the key area is emotional mastery. So knowing what your cognitive biases are. Are you a person who trades, who's prone to over trading? Are you a person who is hesitant to put more trades on, more risk on when things are going your way and you've got the right trade in place? So that is key. Key is working out what you should be doing and how you should actually keep your emotions in check.
What about execution? Because I know back in the early days, you would trade with a counterparty who would quote you a spread, but it was also important for them to fulfill that execution for you. Today we have electronic trading, numbers appear on a platform or a screen, but how is execution different amongst the different providers in the market, or how does that, where does that sit in that toolbox of expertise for Forex traders?
So execution is key. For traders trading products such as CFDs, you're trading with your broker being Blueberry, who is blessed with a whole lot of liquidity providers, great spreads, great volume. But for you as a trader, it's more about matching the energy of the market and what's happening right now. Well, we are seeing a lot of volatility in 2026 and 2025. It is a trader's market. So perhaps your execution style should be, because everyone's different, but it should be also matching the kind of energy that we're seeing right now. And that means trading more short term, trading more often, perhaps increasing your position sizes, your lot sizes, getting in and out quickly, rather than keeping a trade or trades on for a longer period of time and watching those trades go stale and then watching those trades being clipped by a series of comments, conflicting comments, for example, coming out from Trump versus the Iranians on the current the wars. But keeping your trades fast pace, in and out quickly over a 24, 48-hour period, I would say is a smart execution style of trading now.
You touched on something important. We're now in a 24-hour news cycle. And the beauty of Forex markets is that they are generally 24-hour markets with the exceptions of weekends and public holidays. And social media has really started to dominate trading. Trump tweets something, it moves markets. Where does that fit into your style and what you see in the markets? Given your experience, should traders be looking for that edge on social media, or is that noise destructive to a successful trading plan?
Yeah, definitely in 2026, we are now so empowered as traders. So obviously many decades ago, you would sit in front of multiple screens where you're watching a series of comments coming out from Bloomberg and your Reuters terminal, and you're trying to decipher what is noise so you can block that out and what is key information for then you to use and jump on and make decisions quickly to then take a trade on that currency pair. Today, if you're on social media, then that's terrific because it now allows you to follow key market participants, such as hedge funds, central banks. The central bankers are some of the key speakers out there. If you look at who is important to focus on right now, look at the most important man in the world. That's at the moment Jerome Powell, the chair of the Federal Reserve, soon to be Kevin Warsh. Who's the most important female in the world? Well, it's Christine Lagarde, the president of the ECB. In Australia, it's Michelle Bullock, the governor of the Reserve Bank. Tiff Macklin, the governor of the Bank of Canada. These are the kind of people, influential people, that we should be following on social media to get a grasp or an idea of what they expect to see in their respective economies, get a good read on the health of their economies, and then we can give us an idea of how to trade that certain currency.
Do you feel like social media, X, for example, has replaced your news wires? You used to have a Dow Jones news feed or a Bloomberg news feed. Today, it's instant on social. You can get that news feed quite quickly on X, right? Have they replaced them, or do they each still have their own space?
Yeah, it's fantastic. I mean, some people may not have access to Bloomberg or Reuters terminal, which could be quite expensive, but X does a great job in actually consolidating all that and giving you up to the second, up to the minute information. So I think that is a fantastic platform. It's really, it does complement Bloomberg and Reuters, but sometimes you do need, X on its own would be great. I mean, it's a great starting point.
You need to validate that it's factual, right? The problem with
right.
social media is that what you're reading might not actually be correct.
That's right.
News about an explosion hitting a particular country may or may not be correct,
Yep.
could move markets incorrectly, and then you'll have a reversal. So it's important to validate and check the primacy of that news source. Okay, let's now dig into market moves. We're sitting here in Australia. I'm really bullish on the Aussie dollar. I think I see a 7 in front of it. I think we're marching higher. Where is your conviction around the Aussie? Do you think we're finally breaking out of this, multi-year low, or are you still skeptical of the Aussie because of US dollar strength?
Yeah, so the Aussie's always been a fair weather sailor, and there's a lot of factors that influence the Aussie. But right now, it's taken almost an eternity for the Aussie to reach almost 72 cents where we currently are. It's gone through a lot to be here. It still looks pretty perky at the moment. And main reasons are, again, it's interest rate expectations, because that moves currencies, including the Aussie versus US. What is the RBA doing right now? Well, they've increased rates in February, and they increased rates again in March. So we're currently at 4.1% cash rate. What is the Federal Reserve doing? Well, their current Fed's fund rate is 3.5% to 3.75, that little range there. So we're slightly above Fed rates now, but the Fed's on hold right now due to increase in oil prices, but we're not in Australia. So Australia, we've had inflation expectations prior to the US-Iranian war. They've increased somewhat now. It does look like very supportive for the Aussie. Secondly, the Aussie does react a lot to global equity markets and global growth. And global equity markets, despite the US-Iranian war, US equities are reaching all-time highs again. It's a positive factor for growth, and it's positive for a high beta currency such as the Aussie.
And it's positive for commodities, right? Because with oil bouncing higher, it is going to push the marginal cost of producing everything else higher. That supports higher commodity prices. We're seeing iron ore remain strong. We've got a world which is electrifying, and we're building AI and data centers, and that requires copper. And all of a sudden, there's this country in the Pacific that doesn't have all the issues around the world. We've got some short-term fuel issues locally, but a lot of the problems around the world are immune from this country called Australia. And if central banks want to diversify, there's only so much gold you can buy without further moving the market, right? And you said that Australia is the number 5. Was it the number 5?
Yes, yeah, fifth most traded currency in the world, correct.
Yeah, to me that looks like a very positive bull case. Obviously I'm biased because I love Australia.
Yeah.
I'm Australian, and we are based in Australia, but it feels like the sentiment's finally changing around the Aussie, and particularly around commodities.
Yeah, definitely agree, Peter. So out of those 8 currencies that I mentioned, the Aussie, the Kiwi and the Canadian are the 3 commodity currencies out of the top 8. And of course, oil price being quite strong. recent times has been supportive of the Canadian dollar. The Kiwis now starting to see growth pick up there as well. They had an inflation number last week, which was slightly higher than expected, so perhaps they might be increasing rates next. Australia's already raising rates. So these currencies are in play right now, and they're very topical for our traders. And they're the ones to watch.
How is the Aussie generally perceived relative to the CAD, to the Canadian dollar? Because they do feel like they're both in that similar basket. But if we're at number 5, how do traders generally see Canada versus Australia? Or when would they rather trade? Is it purely liquidity? Is it exposure? Is it habit? What is it that bumps us slightly higher?
Well, that's a good question, because when you think about trading Forex, you've got 3 distinct time zones. You've got the Asian time zone, you've got the London European time zone, and you've got the North American time zone. Obviously, the Canadian dollar is more active during the London European session, which is the main session, and then the North American session. During our time zone in Asia, it tends to be fairly quiet, fairly much unloved. The Aussie is always active on a 24-hour basis. It is the go-to currency for traders. So you might get information that comes out globally that has nothing to do with Australia, but it might be positive for global growth. The Aussie is the first currency that gets paid and gets bought.
See, that's a really, really great insight, because people that are new to trading or kind of trying to pick their spreads, pick their lane, something like that can get commonly overlooked, right? Canada may be perceived as being closer to the US, probably a better option, but then understanding how different trading time zones work and everything else is really important to, we'll get to that, like picking your pairs and everything else. I want to talk to you about now where you're seeing things in the market outside of the Aussie. Where are you seeing the US dollar? Is it going to hang on to its primacy? Is it in a slow decline? How does that sit with you when you're forming trades?
So the US dollar is still the key currency globally. To think of it as in a slow decline is a bit too risky to move away from that. It is very much important to financial markets in general and currency market. The way I see US dollar at the moment, I mean, remember at the tail end of last year, we had the Federal Reserve say in its dot plot projections that inflation was falling in a kind of manner that they wanted to see, and they were expecting 2 rate cuts this year in 2026. Obviously, with the US-Iranian war, markets have priced out those easings for 2026, so the US dollar has gained quite a bit of support over the last few months. But I think it depends on the outcome of the US-Iranian war. If we were to get some kind of closure and these peace talks that we're seeing right now continue and the war is over, for example, I would expect the US dollar then to continue to weaken. Well, continue to weaken because I think inflation will then start to come off, and we'll go back to the scenario that we saw back in the tail end of 2025, where inflation's coming off and they're going to further encourage growth in the United States. Because remember, cash rate is 3.5 to 3.75% in the States. It's quite high.
And we also do have a funny election cycle in the US, where you have an election every 4 years, you have midterms. That really drives and dictates US policy. And in a weird way, it impacts the US Fed a little bit more than other central banks that have that separation between the independence of the central bank and government, right? With the yen, been watching Japan very closely over the past decade or so. I'm really intrigued what's happening there, because my dad was a former Forex trader, and he tells me stories about, the Japanese boom and bust, and Japan, I think, has been a bit of a sleeping giant for a while. We finally started to see some inflation after decades and decades of trying to pump liquidity in. Where does Japan sit for you? Is it making a comeback? Is it still dead? Is it, is it an opportunity, or is the yen kind of like going to continue to dwindle away and lose its value against the US dollar?
So the Japanese yen, that's very close to my heart, being a yen trader for such a long, long time. And I guess back 3-4 decades ago, and I can remember the bubble economy in the early 90s in Japan too, when things were going well. And when things go well, we're talking about the Japanese stock market. Then we've seen a period of at least 2 decades where in Japan they've had very close to zero growth. And the Japanese yen rates have stayed close to zero for a long time. They're still there. We're 0.75% cash rate right now. Is there enough inflation in Japan to see a rate rise soon to 1%? So we will find out pretty soon. Market consensus is not really there. It's less than 50% probability of a rate rise in the April meeting this month. But Japan, the yen, I see the yen as continuing to weaken because other currencies have higher interest rates. So it is that classic carry trade. And the carry trade means buying a currency with a higher interest rate and selling the Japanese yen, which have rates of 0.75%. So I think the carry trade, if all else is equal, you will just see Aussie yen, dollar yen, sterling yen, euro yen, and even Kiwi yen continue to push higher. So the yen will continue to weaken. And that's what we have seen in the past 2 years.
It's fascinating. The Japanese yen fascinates me because you have such a globally significant economy. They've been trying to stimulate it for decades and decades, as you say. It is so cheap relative to the US dollar, but it's definitely an economy that is a globally significant economy. And I think with what's happening in AI, Asia's really starting to innovate now on AI, a lot of open source models coming out of China, and the Japanese economy is a powerhouse economy. They've got a demographic problem, but a lot of those corporates, Japanese corporates, I think are really sleeping giants. So we'll have to get you back in a few months to revisit Japan, but I really like how it's close to your heart and on the top of your watch list. I'm going to ask you a question that you probably won't like, but you can tell me if you like it or not. Okay. That's your 12-month outlook on currencies and which currency you think will do well. Tell me if you don't like it. I think I know why you won't like it, but tell me why.
So I guess I don't like it because because obviously in Forex, we've always thought that long-term in Forex is about a month. Forex traders at various banks. And even if you think of yourself as a multinational corporation or a fund manager, you're trying to manage your reserves or hedge your portfolio, they do it on a month-to-month basis. So it's pretty hard to predict what's going to happen past 1 month or 3 months. But having a stab at it, look at the key currencies out there that we spoke about, we've got to assume that the US-Iranian war ends pretty soon. If that is a scenario, there's always massive ifs there. That's a big scenario, but if that happens, then I expect to see the US dollar weaken against a broad range of currencies. And the commodity currencies will tend to do well because I expect then the global economy to actually lift and grow. We'll see equity markets push higher, and that is great for the Aussie, the Kiwi as well too, the Canadian dollar as the third commodity currency. In terms of Europe should gain as well too if oil prices start to come off, and that'll help a lot of their companies, and you'll see the euro-dollar exchange rate move higher as well too. So they're probably the four currency pairs that I'm focusing on right now.
It sounds like what you're saying is that the war situation at the moment, the geopolitical unrest, is really significant to the way that the US dollar will trade because of the implications around inflation, global growth, the disruption to trade and everything else. Once we get past that, either good or bad, there might not be a resolution, right? What happens if we get sucked in? What happens if this ceasefire doesn't materialize, things get worse and we find ourselves back to where we started? How do you think that plays out for the dollar or the euro?
Okay, so if you've got the wrong trades on, you've got to be nimble, got to be quick. You've got to get out of those trades. Get out, don't hold on for dear life. So that's why you've got to continue to trade short-term Forex. If that scenario doesn't play out and the US-Iranian war extends and the oil price stays around, or moves up to 120 US a barrel, first of all, and then stays up there or continues further higher, then that's going to adversely impact inflationary expectations. And then, unfortunately, it will force every central bank's hand to start raising interest rates a lot quicker. Australia's already done it, but we'll start to see other central banks do that. And then it's pretty hard to pick which currency will appreciate versus another. But you'll get you'll start to see some central banks diverge away from others, and that's where those short-term trading opportunities lie.
We're now going to go into closing positions. It's been a fascinating conversation about currencies and how they move and why they are so dominant. Before we wrap, I want to ask you, if we had to eliminate all but one currency pair, which one would you keep?
Well, I would focus on the Aussie versus US, not just because we're here in Australia, because it is the global currency of choice. And when the economy does pick up globally, I think traders will be looking at the Aussie and thinking, right, I'm going to take that and bid it and buy it. So, and also the Reserve Bank of Australia has also started to increase interest rates as well. So that's moving. So definitely the Aussie versus US is one to focus on.
Now I've set up the Aussie US chart. I'm going to open up all my indicators and I'm going to delete all of them except one. Which indicator do you keep on your chart set up against the Aussie?
Oh, I think the exponential moving average works pretty well. So I like using the 20-day EMA and the 50-day EMA, and looking for crossovers, or looking for if those two diverge from each other or if they converge and cross over. I think that's pretty important to get a sense of the direction of the Aussie.
So you use the daily, just to clarify. Your time frames daily?
The daily, I look at that for market structure. Where is the market going? Is there an uptrend, downtrend, or sideways? And then I'll jump on the 30-minute chart, 5 minutes, and I'll do my trading based on the 5-minute chart or 30-minute chart.
So traders, there you have it. The Aussie with those two indicators, a great setup if you're not sure what to trade. Before we wrap this episode, we're going to go to a listener question. Alex asks, when a major news event drops, the chart often moves in the opposite direction of the data. Why does good news sometimes lead to a sell-off? Great question. Why does news behave differently when it comes out to what's anticipated?
Well, I thank Alex for the question. As the question says, that sometimes can happen, doesn't always happen. That's key. This is a classic buy the rumour, sell the facts scenario. So if there is some data coming out and the market traders expect that news event will be positive, such as US non-farm payrolls data or Australian CPI, then traders may already be long ahead of that news event. And then when it comes out positively as expected, then the market will start to take profit and sell and close their positions. And that's why you tend to see a sell-off soon after that positive outcome. So markets move on expectations, not on outcomes.
Well, Carlo, thanks so much. You've been a wealth of knowledge. We're really, really privileged to have someone of your experience join us today, give us your insights into Forex trading, give us your ideas, your tips, your strategies. You haven't given us your World Cup tip. Do you want to share that now, or do you want to hold that to be a secret?
Australia, of course.
Okay,
no problem.
Australia, go Australia. And also, while I've got you, your NRL tip. Who's your favourite NRL
as you
tip?
know, the Sydney Roosters, of course.
Okay, I won't hold that against you, but I wish you all the best. We'll have to get you back to talk about the Aussie and to really recalibrate after this geopolitical unrest comes down. But thank you so much for sharing everything with us. We're really, really grateful for you. And to you, our viewers, thank you so much for joining us in another episode of the Make Your Move podcast. We want to hear from you. We've had some great questions over the past few weeks, and we want you to continue to send them through. We also want you to do something very, very important. Share this with someone that you think will find this useful. We've spoken a lot today about Forex markets, why they're important. We're going to continue to explore other markets in the coming weeks. We're taking feedback from you, and so we want you to share this with someone that you think finds it useful. And until then, thank you so much for giving us your time, and all good luck with your trading. I'm Peter Esho, and this has been another episode of the Make Your Move podcast.
This podcast has been powered by Blueberry, a licensed CFD broker. For listeners based in Australia, Blueberry holds AFSL 535,887. You should read the PDS, Client Agreement, and FSG. For clients based elsewhere, Blueberry holds a full-service dealer license with the Mauritius FSC.